All right, we should be good to go. All right. Should be good to go here. All right, so let's get a quick check in the live stream. You guys should have audio and video now. Just bear with me. All right. Okay, you guys should be able to see my screen, and I think we're good to go. Okay, excellent. So what I'm going to do, again, is review whether we have gap psychology. All right, that's the first thing. Second thing, confirm, again, bullish directional bias. So I'll be looking for longs only, gang. Longs only. If you want to re-anchor the 10-day VWAP and track the first of the month VWAP, really, really easy. Are we above? Are we above? Are we below or inside that zone? Are we above, below, or inside those levels? It's a really easy way for those of you that are considering, okay, do I want to be bullish or bearish on any particular day? That's a really easy way to do it. All right, so the next thing I'm going to do is go ahead and jump into my Thinkorswim. And again, when you're looking at gaps, gang, when you're looking at gaps here, do it on the daily. What you want to know is, are we opening both above the previous session open and above the previous session high? You'll notice we don't have the high criteria met quite yet. All right, we don't have the high criteria met quite yet. All right, so again, just a quick reminder that give me 1 second. Where did my all right, there we go. A quick reminder that we will be live streaming into 2 rooms. I will be checking the questions, but the first hour or so, gang, at least until about 10:30 to 10:45, the prerogative is going to be getting some trade ideas out there, explaining my process, and then we'll go back and review some questions, okay? All right, so again, the first thing we want to take a look at is, are we gapping in a way that meets both the criteria of opening above the previous session close and the previous session high? And that is a no. That is a great big no. So what that means is I'm not going to anticipate a lot of fade, in other words, shorts on the open, unless that criteria has been met. Now, the only market that's really selling off pretty swiftly at the moment is the YM, and it is right now actually heading down towards a V-score low. All right, so you'll notice here, I've mentioned, look at the window. These 2 cyan lines on the chart that I've scrunched up on the right here, we are trading well above both those V-scores, well above both of them. And the V-score 10-day should be anchored to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 should be anchored to April 16. All right, April 16. And again, we're above the first of the month, and we're above that April 16. So again, I'm long and long only. And the first buy that is presenting itself is a very aggro, because the markets have been open for a grand total of what, 2 minutes. The first thing that I'm even allowed to do, the first pitch that I see flying down that might be in my zone is going to be, right, might be a pitch that I want to take a swing at, is that Dow buy. Okay, is that Dow buy. Okay, let's see here. Give me 1 second here. Okay. Looks like a few people are having some issues with the audio video in the futures room. I think Lorna's rebooting you guys, or reloading you guys, I should say. Okay. All right. So again, the first thing, and let me walk you guys through that setup. V-score low and HPMR lows. These are the first two pitches that I'll be looking for in the morning. By the way, for those of you that are in the futures room a lot and don't log in, I will tell you that when you are in the room over the weekend, restart the room. Restart the room, because if you guys just kind of stay logged in, a lot of times the problems will be a little bit more, they're frequently occurring if you just sort of stay logged in. So every now and then, just sort of re-enter the room, exit and re-enter the room. It'll make everything work a lot better. All right, so the first two pitches I'll be looking for in the morning: V-score low, HPMR low, and then V-score low plus HPMR low. And that, of course, gang, is the beloved Garden Lady low, as I like to call it. All right, that's not a frequently occurring setup, but definitely one that does occur from time to time. Okay, it does occur from time to time. All right, so that's the first thing we have. Now, gang, if we miss that trade, quote unquote, miss it, don't get panicked. Don't chase it higher. The specific zone for it is when the cyan line, excuse me, when that cyan line is touching that low. Now, you might say, what is that low, Raghee? That low is what's known as the V-score. It's the standard deviation of the volume weighted average price. In other words, it's a Z-score on the VWAP. Hence, I call it the V-score. So the lowest point since 7 a.m., which is where this is anchored, and the highest point between 7 a.m., you can just grab a drawing tool for those of you that are in TOS and just put a horizontal line right on the study. And that's all you really need to do. Just track the highest and lowest point between 7 and 9:30, which I think was a question this morning in Charts and Coffee. All right. So that's the first thing that I've got. Now, in the meanwhile, what else am I scanning for? I'm scanning for other things that might be looking very similar. I'm scanning for other crude oil. It could be maybe some Australian dollar, maybe the Japanese yen, markets that, and why did I pick out those specifically? Even the Canadian dollar. So I can look at the 6C and the 6A for long setups too. So those are two very complementary currencies that should strengthen if we have strength in equities. The 6J should actually weaken. The 6J should actually weaken in that scenario. So I can look at a handful of currencies. Again, 6C, 6A, Canadian dollar, Australian dollar futures. I can also take a look at the crude oil market, which does tend to want to track somewhat with the equities, although crude oil is below its 10-day VWAP, but above its 1 month. And it's not a double green. It's not a double green. So a little trickier on crude. There might be a little bit more two-way trading going on in crude. I do not believe there's going to be two-way trading really viable for the equities. Certainly not the Dow, not the S&P, not the NAS. All right. There we go. Not the NAS, and How about that Russell? Russell's the only one of the indices on the daily that's been in chop. It's not double green at the moment, but even it is above that 10-day rolling and the first of the month anchored VWAP. So hard to not focus on the long side. All right. Hard to not focus on the long side. Okay. Having said that, so what am I scanning in the morning? So what's sort of a list of future symbols? So for those of you just kind of follow along there, what am I looking at? There's a list of future symbols. S&P, of course, really Dow, NASDAQ, S&P, Russell, crude. You can look at the VIX if you like. I don't typically trade it, but you can look at the VIX if you like. So CL, even RB. I want to look at the, like I mentioned, the Australian dollar is viable. So why those? Those are calm dolls, gang. Those are calm dolls. And there's 3 of them. Australian dollar, New Zealand dollar, Canadian dollar. All right. So those will typically be better to look at. You can also look at the yen. The yen is sensitive to the risk appetite. So if there are other currencies, but they're not as sensitive to equity. So we're focused on those specific currencies that are sensitive to equities. All right. That are sensitive to equities. All right. So Dow was the first one to give us an opportunity off the V score. I hope you guys got a good look at that one. It happened fast, but sometimes, look, we're day trading, gang. This is not a slow moving style, but here's the benefit. Because you knew, and at least now you know, because you know specifically what is going to trigger the entry, and it's just sitting there. That low has just been sitting there waiting since just after 7 a.m. 5 minutes after 7, that was the lowest point we saw on the V score in that preceding 2.5 hours before the bell. So it's not like that level comes out of nowhere to just tell you, surprise. It's not like that at all. That level's hanging out there, letting you know that if this reading gets down to that level or even close, especially before 10 a.m., you can look at micros or the DIA, especially before 10 a.m. I would recommend a more flexible type of entry, allowing you to take a little bit more of the volatility that we will see during this point in the morning. All right. So that is that. Okay, so the next thing we want to do is look at, let's see, the ranges, okay? What are the current opening ranges, that clearing range? What is the clearing range looking like? Now, what do I mean by that? Is it narrow, narrower, or wider, or within historical volatility? All right, how do we do that? Auto chartist. We look at the HPMR, the hourly price movement range on auto chartist. So what I'm going to do is I'm going to jump on over here, and what's normal for example, the Dow. We'll just kind of focus on the Dow since that's the first one that gave us anything actually at all to do this morning. All right, so what's the Dow have to say about all this? The Dow says normal begins right around 120. Average is almost 160. So by 10 a.m., I'd like the Dow to at least have printed 120 points from the high to low range of between 9 and 10. Most of that, by the way, is going to come between 9:30 and 10, right? So even though I'm looking at the hourly, the 9 to 10 o'clock range, most of that is going to occur from the bell to the top of the hour. So I would like to see that number at least 120, preferably closer to 160. We're nowhere near that right now, but in fairness, the market's been open 13 minutes, right? What about the NAS? And we're going to go through the same process with every one of these. Now, this is really important, gang, and this is something that not 1 in 10 traders does or even knows to do unless you're in the room with us. And that's not because it's any top secret thing. It's because what we're doing is we're looking at data that most traders simply aren't aware that they have access to. In other words, they're not aware that they can look at the sort of tendency of the morning. They're not aware of that. Okay. So right now, for example, the Russell has 9.7 points. This also is why I recommend micros and options during this point in the morning, because as the markets are very naturally and quite predictably seeking out the range. I'm not talking about direction, gang. I'm just talking about the high to low range. I'm not talking about predicting moves and projecting and all that kind of thing that, a lot of traders think they can do. We can't. We can just react. We counterpunch, right? So the thing to remember here is that the closer we are to a historical norm, the more accurate our understanding of the range and therefore our stops and our targets are going to be. And that's where a lot of traders get really hurt by not respecting what is sort of normal because they don't know. They don't know. So until the Russell plots at least about 14 and a half to say 15 points, let's call it 15, until the Russell prints at least 15 points and preferably closer to 19, the market at any point could expand to get to its normal high to low range, which it does most, 2/3 of the time, 68% probability here with these range numbers. And so if your stop is based on a low that we plotted this morning, but that low, that high to low range, is narrower than what we normally see, it's not unusual that your stop is going to get plowed through. And a lot of you might have experienced that before because you didn't know there's, kind of a normal expectation for volatility, historical. Okay. All right. So let's see. So pretty narrow ranges just to kick this morning off. And by the way, why might that be? Is the market going to sort of, why would the market be narrow this week in general? It's a pretty easy answer. And we know, let's jump on over to Estimize. This week, Tesla's today. Look at these names that are coming out this week. Every one of these names that I have listed along the left side of this screen in the margin there, these are all stocks that are heavily weighted either within the indices or the sectors that are heavily weighted within the indices. Look at these names. Tomorrow, Google, Microsoft. We have Apple on Wednesday, Facebook. Look at this list. This week, Amazon on Thursday, right? This list is intense. And that's only focusing on the tech side of this, meaning those heavily weighted stocks, first 5 heavily weighted names, 5-6 heavily weighted names, Microsoft, Apple, Amazon, Facebook, Alphabet, both of them, and Tesla. So those heavily weighted names are shared in both the S&P and the NAS. This is a huge week in terms of volatility. And that doesn't even include all the other significant names that aren't going to get necessarily the same attention, but could have significant impact on the indices and or the sectors. So yeah, this is going to be a caution week, gang. And this is where a lot of futures traders forget that in significant earnings weeks, gang, we're all stock traders. The Dow is made up of stocks. Dow futures made up of stocks. Dow ETF made up of stocks. So sometimes we need to find out what the ingredients were to this thing to better understand how it's going to affect us. All right, so pretty narrow range, but I can't say that I'm super surprised. I don't think we'll stay stuck in this range all day, but it is very narrow right now. So right off the bat, gang, the market is aware of that one event. And this is just the earnings calendar. What about the event calendar? Now we're going to make a pit stop over at Forex Factory. Let's look at the calendars. This is estimized that I took you through for the earnings calendar that I like. That's my favorite and really the only earnings. Every now and then, I shouldn't say the only. Every now and then I'll jump on over to, what is it, Earning Whispers or Earning Whisper, whatever that is. I will jump on over there. But my favorite earnings calendar is estimized because I can track what I want to track. Then we're going to head on over to forexfactory.com for the, our economic event calendar. You can also use Trading Economics. That's a good one too. All right. So what do we have going on today? What do we have going on today? Well, core durable goods, not a huge number for us. Monetary policy statement from the Bank of Japan. Again, that's not a huge conversation at all because, the likelihood of them switching to a tightening policy or even suggesting that next to no way. So not a big deal. All right. What else do we have? Going into tomorrow, we got some BOC announcements. Okay, really not so interesting. All right. But what do we have on Wednesday? Now, I don't know that the market's going to start to shell up as it's doing right now on a Monday because of a Wednesday FOMC. So for those of you that are wondering, is this market in a narrow range because of the FOMC on Wednesday? No, I don't think it's the FOMC on Wednesday. However, remember that the higher probability play, all right, higher probability play going into FOMC, it doesn't matter if it's a statement, minutes, or speech. All right, statement, meeting, or speech. The higher probability play is to be bullish. Right? Be bullish before the event. All bets are off after, but to be bullish before the event, especially the session before. Session immediately before. So for us, that's going to be Tuesday. Right, that's going to be Tuesday this week. So I don't think that's why we have a narrow range, but it is going to be just another reason to have a bullish bias. But remember, this FOMC meeting is happening as we're getting, again, arguably the most impactful, not really arguable. I mean, the only other week that's a little bit more, only other week that I would consider significant, and not as significant as this week, but the only other week that I would consider significant is the one that kicks off earnings season with all the financials releases, okay? With all the financials. So this is overlapping with that. It's going to make for a much trickier FOMC week. We have OPEC meetings on Wednesday. Let's remember that we are bullish inflation. The reflation. Things are moving lower. Okay, we might get another V-score opportunity here, gang, shortly. Let's remember we have the reflation expectation. With what I call grocery store commodities as well as energy, specifically CL and RB. And we have OPEC. Think of OPEC as the central bank for crude oil, gang. Meetings starting Wednesday. Now, we already know that they're going to increase production. We already know they're going to increase production. That's already been, but if they're going to increase higher than what's already been discussed. So you'll want to be very, very aware of any expectations for higher increased output or lower increased output or any discussion whatsoever about what they're going to do with supply. It's a supply conversation. Be ready for, but that'll be more of a Wednesday thing. But let's keep that in mind. If we want opportunities in oil or oil stocks, it'll probably be better after that event, after that event, okay? So general notes. Okay, let's get back to our day trading conversation. Dow is right back. So here we are at 953, still trading in front of the clearing. Gang, if you're just getting started in day trading, I would actually not do anything. Just getting started, don't do anything before 10. Okay, if you're just getting started, or I would not do anything before 10. Anything we do between 9:30 and 10 is very volatile. It's going to move quicker. It's riskier because, again, we're caught up in that expansion that happens right when the bell rings. Okay. All right. So 9:53 is what I meant to write in here. 9:53 a.m. We've got the YM revisiting the V-score low, and that's another opportunity for some DIA calls. So let's get a little specific about those DIA calls, what that looks like, and how we time those entries. So when the YM futures get down to their V-score low, I can look at the 30th of April, DIA. Now, what am I going to look at? I'm going to look at what basically an at-the-money call would be. And so, you can look at the 340s. I know 341 is pretty close, but you can look at the 340 calls in the DIA. That would be the ETF alternative. The ETF alternative. That's what that would be there. All right. ETF alternative. So if you're looking at the DIA, you're going to price out those 340s, but you're not looking at the DIA. You're looking at the YM, and then you're looking at the 340 DIAs, specifically at the bid. Okay. I'll look to try to scoop those up as the market heads down there at the bid. So again, if you're watching this for the first time, that's all I'm looking to do. YM gets down to that low, then DIA 340 at the bid. And those are running about 268, 9 when we're heading down to that level. So for those of you that are curious, okay, what does that look like? You're going to start bidding maybe even 270, but really somewhere between 268 to 270 on the DIA with the YM V score low. Again, Y options, because the market's still in that expansion period, and we only have a very, very anemic 69 points of, like I said, I want a minimum of about 120. So this is a very narrow range. All the more reason to be prepared with a much more flexible, right? Flexible type of entry with that DIA call. And that's how I like to trade the options on the ETF alternative in lieu of the futures during this specific time of morning, and also in this specific scenario where we're just 4 minutes from the end of the clearing and the market volatility is quite quiet. All right. Those of you that are looking at the RTY and the ES, all the markets went down. All four went down and hit their V-score lows. And again, I'm trying not to emphasize this too much, because I know those of you that have been here for weeks, if not days, or caught even a couple sessions are aware of the setup. You do need a premium tool, and that's the V-score, but that is a buy. Now, here's why it's so tricky. Here's why it's tricky. Let's say you bought this level. So NQ would be an at-the-money QQQ call. RTY would be an at-the-money IWM call. ES would be an at-the-money SPY. Now, you guys that are fans of SPX and NDX, it's the same trade. So if you want to play SPY, cool. If you want to play SPX, that's fine too. They're both valid. It's all stemming from the fact that the futures contract went and tagged that area down there. And notice how we went a little bit below it. That's why I want you using the options. Okay. The upside target that I'm looking at right now across all but the Dow would probably be initially the point of control. Now, usually I go with the value area high, but this is such a narrow range today For those of you that bought the V-score low today, really narrow range. Really narrow range with V-score lows being reached in all 4 indices. So again, that aggro window has triggered all 4 of these as a buy down at that level. All right. So the narrow range of the V-score low being reached in all 4 indices is a valid but aggro, right? Anything before 10 is aggro. Aggro buy. I would say because of the range, all right, because the narrow range, use the POC, the point of control, if they are overhead. If it is overhead. Usually I'll go with the value area high. And that, for example, on the ES, that's the difference between a 2292.5 and initial target, scaling out, exit, scaling out, not getting flat, scaling out. If you have 1 unit, you get flat. If you have 2, scale out. And you'll notice also these are dynamic. They're going to move around according to volume. So keep that in mind. You can see the ES toggling around right now. So I have no problem if you guys want to use the point of control as an optional. And you guys know otherwise, use the value area high or the clearing range high. Right, clearing range high as the first target, whichever comes first. So whichever comes first, value area high, that red line, or the clearing range high, whichever comes first, that's non-negotiable. All right, you can use the optional point of control. I think that's actually pretty smart today. But if not, be a little bit more vigilant about taking some profit here, especially as we enter the 10 to 10:05 window for some volatility. 10 to 10:05. All right. So that is by the way, the value area high is a volume derived level. Point of control is, let me point these out to you guys for those of you that may not know what's on the screen. Okay, so the point of control is where the most volume has occurred today. Where's the most volume on this chart? At that point of control. And that is this level right here. This is the point of control. All right, so around that is a 70% range. And that's what prints your value area low and your value area high. This red line here is what I'm talking about. Your clearing range high is just above that, up in here. So since the clearing range high is higher than the value area high, use the value area high. And that's it. And that's really it. Okay, so some decent bullish bias. V-score lows. Setting up early morning. Low buys. Okay. And that's how we kind of started off the day. So we don't have any real, not any breach retreat setups yet, but we will get there, hopefully. Let's do this. Okay, we will get there. Okay. So just a quick look at what we're looking for in the morning, symbols that I'll look for, the first 2 pitches of the morning, actually first 2, and you can count that as a third. That's just a combination of the other 2, but technically it's a third pitch. That is true. That is true. Clearing range considerations were narrow. What's on the economic calendar? All right. What's on the economic calendar? And then with the FOMC being bullish in front of the FOMC. Okay, that anything we do before 10 a.m. is aggressive. And then now what we're waiting for, it's 10:03. Now we are waiting for a breach through the top of the clearing range, high of the clearing range. All right. When that happens, and it has on the S&P, S&P went first. All right. ES has breached. Let me show you what that looks like. ES has breached without NASDAQ. Right? Am I wrong on that? Give me one sec here. Yeah, ES is breached without NASDAQ. I'll show the ES breach looks like here. That's what it looks like. We have taken out, that's the high plus one tick. That's the high plus one tick. And you'll see right there, it just automatically pops up. Okay, now I need the NQ to breach to really be confident about the ES. And I'll show you what the exception would be here in just a moment. And NQ did just breach, by the way. 10:04. NQ has breached. Okay, thank you, NQ. Like you showed up on Q. Now, why do I need the NQ to breach? Because the ES is basically sort of a hack NQ, except for the fact that XLF, financials, and XLV, healthcare, are part of this conversation. Now, if healthcare and, not or, if healthcare and financials are strong, which they are not today, then the ES can do its own thing. Only when, all right, only when the XLF and XLV are strong. It's got to be and. And it's not even a guarantee. Does the ES have even a shot at doing its own thing? Apart from the NAS. Okay, so that is not the case today. And if you don't have strength, when the ES breaches without the NQ, if you don't have strength in that XLV, XLF, you've got to wait for the NQ. So today would be a got to wait for the NQ situation. All right, so clearly S&P and NAS have both started moving higher. RTY has not breached. Dow is bouncing off those lows, but not really convincingly strong. So your relative outperformance right now is coming from the S&P, motoring along with tech and financials, and NQ has joined the party. So now, 10:06, we can start working up breach retreats for those two. All right. We can work up breach, retreat. I'll show you how that works. Buys in NQ and ES. All right. So that's where we sit at the moment. All right. So V-score lows triggered across the board. Gang, V-score lows are going to be things that, especially during the morning, once you know what the setup looks like and is, well, you're going to be a whole lot more comfortable being self-directed and buying those calls on your own. But it can be a very powerful, if not aggressive, but very powerful opportunity for us in the morning. Not everything's going to be after 10, and that's just the way that it is sometimes. But in the futures room, gang, yeah, you guys who are comfortable using that V-score of mine, that already threw a nice little pitch for those calls. And especially when you look at what happened with Dow and with Russell, with the V-score dipping below the range low, that's why we like a little bit more latitude to sit through the volatility with the option, or the micro for that matter. All right, 2 shots at the DIA today, a single shot, quick shot with the NQ RTYES. Gang, we are long and long only right now. Okay? Long and long only. Now, the only other thing that I'm concerned about when the V-score is hit is double red. And we did not have a double red market. All these V-score lows hit with a yellow wave. So this is the 81321, the top row. The second row of the JT multi-trend is the wave. This is the wave interpretation of the trend. And that wave remained yellow during that dip. That is, gang, that's a good setup. It's during an aggro period of time, but that's a good setup. The tricky thing today, narrow ranges, but it's long and long only, gang. Long and long only. So let's build out the breach retreats we're looking for. NQ and ES only. So some of you are probably already going to be long. I would hope a lot of you that have been in this room for a period of time with these premium, with these, I know that this tool is premium, but if you've taken the ultimate day trading class, the indicator came with it and you're already well aware of this setup. This is one of the first two pitches we get. Garden Lady low today? No, but good V-score lows. All four. Wow, I can't remember the last time that all four of these hit like that, which is terrific. All right. So looking at, and by the way, all the volume tools I'm talking about, gang, V-score, VWAP, and the value area high, point of control, value area low, what's known as the V profile, those are all part of one bundle. Because by the way, volume profile isn't anything I created. Volume weighted average price was actually created by the Ford Motor Company in, I think, 1983 or 1986, right? So I didn't invent those. V-score is my invention, my creation, if you will. But what's more important about any volume tool is not to use a rolling variety. In other words, if you see VWAP or you see some sort of volume profile and you cannot anchor it, you cannot anchor it to a specific time or date on your chart, I feel that their effectiveness is far, far lower. Rolling VWAPs, I guess it's better than nothing, but not much better. You want to have an anchored volume tool. All right? I don't believe in unanchored volume tools. So those all come, that package, it's all included in that one thing. That's what I'm referring to for the questions about value area high. All right, so let's get the pullback here. Now, everything else on my screen, by the way, everything else, before anybody goes, oh, great, I got to buy an indicator. No, you don't have to. In fact, if you just join the room, don't go running out buying anything. Watch the way I trade. Watch the way, all the traders here in the room trade, and then figure out what suits you, okay? Don't go running out buying indicators. Take some time to observe. Take advantage of the Learning Center. Take advantage of the webinar playbacks in the dashboard. Take advantage of these live sessions, of course, the premium videos, and then decide which path you want to take. And then, at that point, it will become pretty obvious, what tools you do or don't want to pursue. Everything else on this screen, grab candles, the JT multi-trend, the wave, the Darvis, the zones, the Waikiki that shows us the breach and the numbers, all this stuff up in here, everything else on this screen is free. Okay, gang? All right, so what do I need now? I need to set up a day trade, and you can do this with QQQ too. This is going to be a day trade June NASDAQ buy, which can also be taken with NDX or with QQQ, whatever you'd like. The aggro, the first opportunity to do this is going to be at 13,933. That's going to be my first limit buy. We have another setup that's happening at the same time as this one. We'll get to that one in just a moment. My moderate setup is going to be, yes, all of these require pullbacks, gang. Every last one of them require the market to come back. I do not buy into higher highs. Momentum trading is fine. It's just not something that I do. All right. So conservative is going to be down at 13,905. All right, my first target for this particular setup, me just tracking back up to 13,949. Okay. My stop loss for this Stop for this particular setup is going to be below the major psychological level. So my stop loss, sell, right, is going to be 13. I'm going to go about 890, 895, that area. Okay. That could be a sell stop. Every one of these are conditional orders. Okay. I cannot express this enough. I do not, nor do I recommend market orders. Okay. I do not use, nor do I recommend market orders. Everything I'm going to recommend to you guys are going to be some sort of conditional order. It's going to be a stop or a limit. All right. And if you've watched that Garden Lady video that I share with you guys, where John recounts the 3 things that the Garden Lady told him that losing traders do. They use market orders. They place their stops too tight, and they overtrade. And it's funny how 2 of those 3 things are directly attached to market orders. All right. Okay. So you might say, okay, Rod, that's the first type of setup we have. Yes, that is the first type of setup we have. We might get a better shot at the retreat in the June S&P because the Dow is hopping around. So that S&P actually might come back to us, which is fine. It's valid. If that's all we get for the breach retreats, that's fine. Okay. And this is a breach retreat setup. I'm going to set the wave up here in a moment. The June S&P buy is also a breach retreat. All right. Now, for those of you that are wondering, Rod, can I buy pullbacks to the wave? Can I buy pullbacks to the wave? Yeah, as of about as of 10:08, that was valid. All right. 34 EMO wave buys. Valid in the NQ and valid in the ES. All right. So that's a little trickier. I'll let you guys know when they're valid, but that's where you guys are going to be a little bit more self-directed because the value of the wave is constantly, and slightly recalculating. But as long as we're double green, you can buy those pullbacks into the wave, preferably with options. Okay. If it goes yellow, just be a little bit more flexible about how much volatility we'll have to sit through before the continuation. All right. So if we're going to get a shot for a breach retreat in the S&P, and don't rule out, this market's just going to take off. It could. But around 1025 to 1035, sometimes we get some volatility. Around 11 to 1105, those are other windows. You never know when the market just decides it wants to sell off. And we want to have limit orders waiting there as long as we can handle the risk of the distance from the entry to the stop. So my moderate level, my aggro level, everything's pretty darn narrow on that S&P. So that's going to be tricky, gang. But again, all the more reason to perhaps go SPY, SPX today. A conservative level for the S&P is going to be down at 41.75 and a quarter. Very narrow range on the S&P, gang. Not even 8 stinking points. Very narrow range on the S&P. But we'll deal with this, I'd say, by going with the SPY. I might be a little bit more flexible on the stop, but for right now, I'm going to keep it at 41.74. 74, we might, again, I don't like to move my levels around. So a couple things I'm not ever going to have you guys do. One is I'm going to give you guys a price. You got to have a price, right? You can't just wait for me to tell you what that price should be. You got to have it before the plan is set. Okay? You got to have it before the plan is set. Notice we're not talking breach retreats. Notice we're not talking V-score lows or any such thing for the markets right now. And by the way, your 4181 on your S&P just got tagged. Your 4181 on your S&P just got tagged. I'm not talking about V-score lows anymore, right? I already have some DIA. They were looking good, and now they're actually just below break even. Holy cow, something just hit the Dow like a ton of bricks. That's okay. Drag the S&P down and just gave me my 4181 entry. It did it tag 78? I don't believe that it did on that low. I think it got down to 79.5. Okay. Now, those of you that are already in the V-scores, those of you that are already in those V-score low buys, you've already taken profit because we've taken out the value area high and the clearing range high. If at this point you have not scaled out, don't be double mule, gang. Don't be twice as stubborn, half as smart here. If you had that V-score low and we have hit the value area high and or clearing range high, you pay yourself, you move the stop to break even. So right now, any V-score low buys taken in the clearing right during that clearing range, during that clearing period, should be at break even. Meaning whatever you paid for those options, you're not really seeing much. Okay, so anything you took before 10 in the clearing range, that clearing period, should be at break even because we've hit the high. We've hit value area highs in Russell, I believe. We did hit the value area high at 3420, I believe it was, in the YM, I believe. And then ES and Q, you guys know we took everything out. All right, we took everything out. Let's see. So again, if you're looking at anything other than the NQ and the ES right now, you know, again, where you place your attention is really important. We're focused on the breach retreats now. The best setups are the ones right now after 10 o'clock that have indicated the market's willing to take out the high. Please don't say fixated on the Dow. Either you already have a position there or you're moving on to SPYES or QQQNQ. All right? We're not focused on DIA, buying again those V-scores. It's a laggard now, gang. Know your laggards. When you have a breach, that's going to be your preferred focus. Go back to the other stuff, but know your laggards. All right? Right now, they are the RTY and YM. Notice I'm not talking incessantly about those two. Right, we're focused on where the markets are breached. And then we can go back to those if we want. We can go back to those if we want, but at least have those setups ready to go. 81, gang, 81 got tagged. So either you're looking at the candle, pricing it, and that one happened fast. I will say 81 happened very quickly. Then again, day trading is a quick style, which is part of its appeal and part of the challenge. No doubt. No doubt. All right. Let's see. Let's jump back on over to that RTY just to show you guys what we've got. Again, a market that has not breached. Still stuck in the range. As you can see, hit the V-score lows a couple times. Narrow range. Well, how narrow is that? 12.3. How narrow is that actually? RTY may not be as narrow as some of the others. You know, Dow is insanely narrow, but RTY may not be as narrow. You can see there, it's still narrow, of course, but it's not. See, for example, Dow has a 69-point range, and I'm looking for a minimum 120. That's very narrow. We missed Russell by just a handful of points, but it is a narrow range. And so IWM is going to make a whole lot more sense, right? So think about all the things that I've been warning you guys about all this morning and why IWM makes more sense, or a micro. That way, and again, gang, I've been talking about this range, the issue that, this could easily expand to what, about 14 and change, right? That means I've got to account for at least plus or minus 2 from the lows, right? Plus or minus 2 from this low. So to account for that volatility that I could see, the IWM is going to be a better bet, or the micro. That's what we've been talking about, the narrow range, because it changes the way that we position size, and it changes what it is that I'm actually willing to be a buyer of. Okay? So you might say, well, what happens when the B score goes lower? For all the reasons that I've been talking about for nearly an hour, we should anticipate that it could be a little bit more volatile in here because of this. That's why I talk about the range, gang. Remember I said you can end up placing your stop too tight. You can end up not being more flexible because the market did not sort of spread its wings as much as it could. That's the idea. That's the why, gang. That's the why. All right. So, and those are perfectly valid buys, by the way. I don't have a problem with either one of those. Those are perfectly valid. I do not have a problem with those. All right. What else do we have here as we're taking a look? And then, gang, in just a few minutes, we'll start looking at I'll start taking a look at the questions. Okay. All right. So we got the breach retreat and NASDAQ in place. Got the breach retreat in the S&P in place. Either of those levels are triggers, not actual limit buys. So the limit buys apply to micro and mini futures traders, right? The limit buys in the alerts apply to mini and micro futures traders. All right. For options traders, those limit buy levels are triggers to price and buy the at the money option. Now, for me in the ETF, right? How does that work? For those of you that are curious, yes, we can day trade the SPY, right? That would have been tricky today because of just how quick it happened. But for example, so you guys have an idea, as the market is selling off towards the agro 4181 limit buy level in the ES alert, right? You would then, if you want to trade options, right? Price the at the money call in the SPY. They might say, well, Rog, how do we know what that is? Look at the chart. What do I mean by that? So as the ES is selling off, just to give you guys a little bit of mechanics around that, as the ES is selling off, and I think today would have been darn near impossible, but see how it's selling off. All right, well, okay, that tells me I need to figure out what's at the money in the SPY. And as we're selling off, I can see we're crossing down through 417.80. We're crossing down through 417.70. Well, gang, once we're below 418, you're pricing the April 30 417. So once we cross down 418, I think there's a 417 and a half. That's probably fine too. But as soon as we cross down 418, you've got to be slightly in or at the money, which means you got to look at the 417 and a half or the 417 on the SPY. That's that was, so it's not that it's an unknown until we get right to the trigger. Just look at the chart and go, oh, okay, what's at or slightly in the money, not out. So notice I didn't say 418, right? So 417 and a half, which is kind of unusual that we have that half, or 417. That's it. This is not, don't make it complicated, gang. Does not need to be. It isn't. It's actually embarrassingly simple. Okay. And then what happened after we hit that? Gang, we've already hit the value area high again. So you've got to be back at a break even. You see we hit that red line, value area high. So you're at break even. Doesn't mean that we can't get in again. But it just means we go to break even. The ES lost its double green at 4:18 a.m. I would refrain from the wave buys on ES, but guess who's pulling back right now into the wave? The NQ. What makes the wave buy valid? We've got to take out the clearing range high. Check. We've got to be in a double green. Check. We can buy the pullback to the wave, which today is actually overlapping with the top of the clearing range right now at this moment. Okay. My folks that are in the sector secrets, you guys will notice some of those energy stocks are coming back pretty nicely today. All right. Our Qualcomm, after the 1, 2, 3 bottom, we're going into earnings. We're going to have to get out of that thing pretty soon. All right. So we'll be covering that in the live trading for sector secrets, gang, but looking a whole lot better on that book of trades this morning for sure. All right. So that's a wave buy right there, gang. So what does that give the latitude to do? Go buy some QQQ. Buy some QQQ. All right. Buy some QQQ calls. If you want to grab the micro or the mini, that's fine. But just remember, these are more aggressive. This wave approach, it's a little bit more aggressive. So all you have to do is go take a look at the April 30. Where are we at? 340.16, right? So I can't go 341. So I think you're fine with the 340s. Look at the 340 strike. 340 strike on the April 30. All right. And then you look at the bid. You look to buy at the bid. It's about a 3 to 4 cent spread. Buy the bid or step out a penny in front of it. Buy the bid or step out a penny in front of it when we're down inside the wave, when we're trading down inside the wave. All right. Okay. Next up is okay. What else is moving lower? And we could do anything with. So nothing else is breached. So right now, so by the way, okay. The other thing, knowing that right now that the NQ and ES are leaders, where else? Focus. I mean, I can go back to the 6C, 6A. I can focus also on related sectors and stocks. I'm going to go down another layer deeper. So QQQ can also be potentially XLK. Is XLK tracking like the QQQ? In other words, is it strong and the QQQ strong? Yes, that's good. So the XLK can be one place to look. How about XLC? I'd probably be a little bit more cautious about XLC. It's buyable, but it's a little bit laggy, right? It's weaker than the NQ would suggest it should be. XLY. XLY is a big cup of nope. XLY is doing something completely different. Now, why was I looking at those three? Those are your top 3 weighted sectors within the NASDAQ. What about the XLF? Because the S&P is quite strong. Is XLF breach, retreat, that type of thing? Yeah, actually it is. So I could look potentially at calls and XLF. XLV Healthcare. Thanks, but no thanks, right? Now, what about the Dow? If the Dow's going to start heading higher, it sure would be nice for transports to get out of their own way. They're not right now. What about industrials, XLI? We'll talk more about these sectors in the afternoon today, gang, when I'm with you guys for Sector Secrets. I leave XLI alone as well at the moment. Now, what about some of the more fringe, sort of kind of out on the fringe, not quite at the heart of tech in terms of the weighting, but what about things like semiconductors? What kind of mood are semiconductors in? Pretty darn good. SMH would be, I'd say, something that looks a whole lot like tech today. Looks a whole lot like, I'm sorry, but the NASDAQ today looks a whole lot like the NASDAQ. Okay. What about cloud computing, CLOU, something that we've been, well, gang, we have, oh, wait a minute. You know, for Sector Secrets, gang, that CLOU gave us a really nice gap up today. Holy cow. Really nice gap up on CLOU. So we'll talk about that one this afternoon. But if you guys are in, I know some of you are in both the futures room here. So by the way, for those of you that are wondering, what's the difference? Gang, anything I do in futures is in the futures room. Okay, so I'm not going to go run off and do something. This is all my futures trading, end of day and intraday. Okay, the Sector Secrets is how I trade stocks, ETFs, and options. All right, now if you're in both, you're pretty much looking at, you know, most of my trading life, you know, barring Forex. And so one of the things that we did is set up that CLOU. So anyways, we'll talk about that. That's a nice little move today. All right. Yeah, EW. Yeah. Lorna, did you get a piece of that CLOU? I remember you told me you got EWC. Yeah, that's a nice trade today. And by the way, you know what else is moving with CL is it's our Dropbox trade. I wish it was moving a little bit better, but Box and Dropbox should be looking a little bit better too. All right, moving on. Well, they're a little laggy, unfortunately, but CLOU is more than making up for that. Okay, as a day trader, though, can I look at CLOU? Yes. If you're a Sector Secrets trader, you're long already from the 27 area. Heck, you're long. Gosh, that CLOU trade, I'll have to double check on that because I think we hit the moderate too. Yeah. All right. Anyway, back on over to other sectors we could focus on. SKYY is fine. SMH. IGV is something that I've been looking at a whole lot more. Not for day trading, but I'd like to start building some positions in software as well. So we'll do a lot more discussion about sectors and so forth later. But I just at least want to walk you guys into that world because as a day trader, you know, you can look at those sectors. You look at the broader index, then you look at the sector, and then you can look at individual stocks. So by the way, that means that I want you guys to be well-rounded day traders with a futures first mindset, but then open to all the connected opportunities. Okay? Open to all those connected opportunities. All right. All right, let's see. I think I'm just trying to take a quick scan to make sure I'm not missing anything that I want set up. 4181 is hitting again on the ES, gang. 4181 is hitting again on ES. And those V-score lows were, to get all four of those V-score lows hitting today, that was just crazy. And then for those of you that are in DIA, let me give you some guidance here because I don't sweep underperforming trades under the rug. Not ever. I probably talk about them too much sometimes. If you are, well, you probably are, but if you are in DIA, Again, not YM, not the micro. Your tolerance, I call it tolerance, your risk tolerance, right? It begins at 15%, so negative 15% on premium paid, to 25%. I will usually, and there's always an exception, but usually, I will usually cut a trade loose once it is an options trade. Sorry, cut an options trade loose. Now you might say, what would be an exception, Rog? It's going to have to be something really good. Value area low, V-score low, HPMR, major psychological level. If there's something on the chart that makes me think, well, we could catch a bid here, and I'm down 24, 25, 26%, I'm not going to be like a robot about it, right? But it's got to be something like that. It's got to be something like that. So that's why I said usually. Right? If it happens to be at a level where, VWAP, V-score, HPMR, something like that, major psychological level. Maybe it's back at the clearing range low, right? If I think that level could change hearts and minds and therefore momentum, right, then I will maybe give it another percentage of 2 of latitude. But remember, never risk more than 5% of your account on a single trade. Now, for me, a trade will usually have multiple entries, but if it's the same strategy being deployed in multiple, it's all one trade. So it's the accumulation of all those contracts, not per entry. It's the accumulation of all the different entries. So the NAS has yet to come back to us. My QQQ calls bought in the wave are sitting tight, and I've got futures contracts at 81 in the ES and some SPY, but I've got QQQ calls only for the NASDAQ setup, and a mixture of calls and the futures in the ES. ES is struggling because of YM. So if the NAS pulls lower, the ES is going to move probably pretty swiftly if both the NAS is heading lower and the YM. So right now, NAS is strong, Dow is weak, and ES is caught in the tug of war. Okay, if you're wondering what the heck's wrong with the ES, look no further than the Dow, right? What's up with the ES? And Q strong, YM weak equals tug of war. Okay, that's what's happening. ES is caught in the middle. Again, as long as my DIA, and you know what, a 15% stop on DIA is probably fine. It's probably fine. All right. I don't have an issue with that. Actually. Is the range, are the labels, the flags premium? No, I make them available to members though. So if you're members of the Sector Secrets room or the Futures room, I make those tools available in the room drive for members. Yeah, they're free to members. Free to members. Okay, so it's 10:42. I can't do anything with the RTY, nor am I interested. I don't want to build any more of a position than the DIA, which I'm actually, you know what? I'll tell you guys straight up. I should be out of the DIA. I'm just flirting. So let me give you guys a little breakdown here, because you might say, Rog, you saw some DIA? Because we hit the value area high. The break-evens hit. Yeah, I'm right around that break-even area. In fact, I'm a little bit below that, but I'm at half position. So this is a little bit of, again, me being as transparent as possible. See how we're kind of in this area? We've been down here already once before. I bought DIA here and I bought DIA here. Okay. So this particular trade, yeah, you've got to be out of once we hit this, or once even in this area here. So this is a pretty good shot. You've got 2 DIAs. If you've already hit the first target, which was right here, all right, you're out. I believe you're probably out, or you're right there at the cusp of having to exit. If you got into this second opportunity, then you're probably sitting a little frustrated, a little bored, and then also down. If you want to use the 15%, that's fine. 25% max. Okay, don't get stubborn with this. If it just doesn't work, it doesn't work. Okay, but I will say this: as long as the NQ is acting strong, even for the YM, there is hope, because the YM has a lot of tech weighted within it. What the heck's wrong with the YM? Look no further than the sectors I just showed you guys, gang. Transports, flat. Industrials, flat to weak, right? Healthcare. So you think about those names that are heavily weighted, the sectors, I should say, that are heavily weighted. Now, we could do a little bit further a deep dive for those of you that are wondering, okay, Rog, but at the stock level, what's going on? I'll show you guys. Let's open up the DIA. Multi-chart. Bear with me. All right, so what do we have here? UNH, Goldman, Home Depot, Microsoft. Now this list is pretty much the same names, but they're in slightly different orders. It just will shuffle up from time to time. So it's Microsoft, Amgen, then Boeing. Donald's has overtaken Caterpillar. Notice they're not new names, gang, just slightly shuffled up order. Salesforce has moved up a couple spots. We have Honeywell. And here comes Cat. And finally Visa. So again, nothing new here. Sometimes 3M, Disney, and Visa will swap for that 11th spot down here in the corner. But realize by the time you get down to Visa, you're about 4.5% weighting of the Dow. Contrasting with the UNH, which is 7 3/4 or so. So what's dragging us down here? What's in a bad mood? Well, let's go to a 1-minute time frame on these. With intraday multi-trend now. Goldman dragging us down. Cat dragging us down. Honeywell dragging us down. McDonald's, Visa. See all those double red 1-minute time frames? Home Depot. Now, when I see weakness here, this is where my 2 trading lives start to interweave a little bit. When I see weakness here, a double red is a dinner bell, gang. This is where we get a little carnivorous. When we see that double red, I'm immediately thinking, is there opportunity for me to build a long position in any of these who already have had earnings or are at least 2 weeks out from earnings? Or at least 2 weeks out from earnings. All right? So keep that in mind. We hit the value area high again on the NQ. So gang, those of you that took the V-score lows this morning, those of you that are a little bit more self-directed and fluent in the way that we do things in the morning, you got a really nice little trade there this morning. We haven't seen as much that's been good since. All right. And yes, I have some ES and SPY from the retreat. The only retreat that I have is in the ES, mostly because of the DIA. And I need that NQ to hold and actually start trading above 65 before probably we get another push in strength. A little lethargic here. But remember, the weakness is the opportunity after the breach. And I've got to, we're right now looking at the next zone on the ES at at, oh, not 48, 78. You guys knew what I meant there. Sorry. If you didn't, my apologies. 78. 78, which we haven't touched, clearly. So 78 would be the next level down that I'd be open to. And I could even make that 78.4, quite frankly, or the value area high at 78.75. That would probably be fine too. If you guys want to go 78, 5, 78.75. If you want to step out in front of that whole number, that's fine. That's perfectly fine. For the moderate, I don't have a problem with that. Okay. No breach on the RTY. We actually had a bearish breach, a down breach on the YM. So again, I'm not focused on anything other than what did I pay for those options and how much of that am I willing to risk? So I'm just thinking at risk management right now on those DIAs. Not where I want to be, but that's just simply where we are. Okay, let's see. And like I said, as long as that tech is strong, even the Dow has a huge weighting of tech, gang, within the individual stocks and sectors. So if NQ can, like I said, take out 65, which we just did, that should drag our ES up. Awesome. It is, and it should help get a bottom in on the Dow, which also traded all the way down to 33,950. That is a major psychological level, a lot lower than I would have wanted to see the Dow go. All right. But again, we have DIA options. You know now how much risk I'm willing to take there. Okay. So I do mean to start meandering over the questions. I just want to make sure that I'm not going to miss anything. No, I'm pretty much, so let me just put a note in here, gang. At 1050, I am long DIA calls from the V-score. Long QQQ from the wave, SPY, and ES from the aggro alert. Okay. From that alert up there. So that's what I've got at the moment. That is what I've got at the moment. V-score really did its job this morning, I got to say. It happened fast, but V-score did its job. All right. Questions. Let's start taking some questions here. So bear with me. Hang on one moment. Get the questions here in front of me. Actually, what I'm going to do, I'm going to go grab a new bottle of water. So if you guys want, go ahead and take a quick break. I'm going to give you guys just a quick break for a minute here, so I can go grab a water. I'll be right back, and then we'll take some questions. Okay. Okay, gang, we're back. All right, let's tackle some questions here. Really quick reminder. I day trade the first 2 hours of the day. That's the focus. Not all day, not gearing up at 11. Okay. What I find a lot of traders do, this is a terrible habit, but you'll see some traders they get to their desk mentally at 9:30, sometimes physically at 9:30, and they end up warming up the first hour. And you'll see very few setups in the morning. And that's usually, a lot of new traders succumb to this because what happens is you're just not ready to play. You're not warmed up. You don't have a plan. You're not ready to play. And that's okay as long as then you don't start playing without really a plan in place. So what you want to do is be ready at the first snap, if you will, at the first pitch. You need to know what the first pitch is going to look like. You need to know what it has to look like for you to swing at it. That way when it happens, and this morning was very much, that V-score low today was definitely a little bit more of an experience. I won't say advanced because it's a simple setup. Was the wave flag yellow, negative, red, negative, and so yellow is fine, V-score low, buyable with the option. So a little bit more experience. Again, I wouldn't say advanced from the standpoint of the skill required, not tricky, but that's what we're looking for, and that's what we got. It was quick. I say that was the trickiest part of this. You had to be, like I said, you had to be ready from the first pitch because that thing came quick across all 4 indices. The only one that's just not cooperating at the moment is the YM, and I did not take a piece of the RTY, although it was perfectly valid. It's usually the last place I will look, quite frankly. My usual focus is immediately Dow and NAS. That's usually my immediate focus, a Dow and NAS type thing. Okay, so let's tackle some questions here. And let's see. Question about the schedule. In terms of the live stream, there's a live stream on Monday and there's a live stream on Friday. Okay, Rick. So you'll see you get a sample of 3 out of 5 of us here in the room during those live streams. All right. The VAH and the point of control and the V score, all that is called the VWAP Max, and it's available in the Simpler Trading Indicator store. Okay. Let's see. What else do we have? I'm just grabbing some of the questions here from the live stream. As far as the profits and everything, targets, they're in the alert that I typed out with you guys. And then what else do we have here? What I call a garden lady low is when the V-score and the HPMR are reached at the same time. Love that setup. It's a volatility and volume exhaustion level. Okay. Targets on day trades are usually initially the value area high or the clearing range high, whichever comes first. You've got to have things, gang, pretty basic, pretty much laid out in front of you. Now, I will say that one of the things I do like to look at, because I can, is I like to look at volume levels. I will look at some volume levels. And so I can, we can look at these different volume levels through a number of tools, whether I'm looking at the volume profile on my trading view chart or whether I'm looking at the book map, right? Those are all things that I will often keep up in the morning, and I'm looking for where the size is waiting. But normally, I'm going to start with that conversation at the value area high or the clearing range high. All right. Okay. And by the way, you'll notice here, even though it's just a sliver, that daily time frame is kind of nice to have handy there, because notice what we're getting up towards. We're getting up towards that NASDAQ high from Friday. Now, everyone's like, yay, the markets are up. Not really. I mean, let's be real. I'm glad they're up. Don't get me wrong. But have we taken out the high from Friday? No. And remember, that's what That's what happens when you look at is it up or down, how many points? You want to know, is it up or down from the previous session? That's important. And 13,988 right there, that's a value area high. I'm sorry, that's a Darvis or value area high. And Friday's high, again, we're getting close, but we're not quite there. What about the ES? I think one of the most important things day traders can do is also embrace the daily as part of their analysis. And that's going to do two things. One, you won't, look, the idea that your life just kind of gets reduced to a very, very short-term time frame is sadly a trap that a lot of day traders fall into. Okay? So super important. Now, a lot of times, well, think of it this way, and it's a very well-used analogy, right? But if I'm using the forest and the tree analogy here, all right? If I'm using the forest and the tree analogy here, the forest is the daily, gang. The trees are the 1 minute. Okay? So the small detail is the 1 minute, clearly. All right? The trees are the bigger picture. So I hope that makes sense. And I think that's why we always want. Now, the other cool thing about having that daily up is you won't lose track of some of the more, some of the bigger picture setups in terms of daily swings and larger trend follows and that broader psychology. Okay. It's easy to lose sight of that when you're just looking at tick charts all darn day long. You're going to miss really good opportunities. And what am I talking about? Well, the other part of our life, gang, it's shoving this 1 minute aside and remembering that I'm going to have to get out of corn this week, and what a ride it has been. This is what I mean about swing trades. These are discussed in the premium video. We don't always have time to discuss them in the room, and neither are they necessary to really harp on in the room because, I talk about them every evening. And we talk about the levels we want to get long and the bias. We've talked about long corn. And you know what? I'm really pleased that people are talking about long corn, but who's not talking about long corn? Anyone says, yeah, I like long corn or beans. Well, newsflash, it's been a bull market for how long? How long have we been double green? Since last September, right? Our most recent opportunity was in mid-March. So yeah, I like when broader markets talk about these kinds of things, but cute how they always talk about it once it's made higher highs. Welcome to the party, right? Welcome to the blatantly obvious at this point. Be careful, although I'm glad they're talking about it because that's what's keeping this thing going really parabolic before I have to get out before first notice date. So I'm not too mad at them. Their late to the party shenanigans sure do help us, especially right now. Okay. So then we have copper. I like when the overall markets are higher. Here's our copper trade, gang. How long do we talk about copper? I talked about copper a nauseating amount. I had to let go Freeport McMoran, but copper's punching up to a brand new high for us. Really, if not patience testing, but never really giving us a lot of heat, in terms of unrealized loss. Not at all. What about gold? Look, gang, it cracks me up that everyone's really obsessed with gold and silver when in fact the reflation commodities are not gold and silver. That's just a blanket lack of understanding for the macro environment, the macroeconomic environment. Remember, gang, if you hear people talking about macro, try to get an idea of whether they're using the word from a macroeconomic perspective or if they're talking about sort of the big lens, stepping out as opposed to the micro lens of zooming in, right? So always know the difference between someone who's using the word macro as a zoom out type perspective, right? Forest for the trees. Are they looking at the forest or are they looking at the trees? Or if they're talking about macroeconomically, 9 out of 10 times they're talking about the lens, not the economics. The macroeconomics of this market say you want to stick with grocery store commodities and the metals like copper, palladium, not silver and gold. And silver and gold are only going to get out of their own way once ZB starts tracking higher and inflation tracks higher. In other words, the bond yield drops while the inflation goes up. That's going to give you a smaller real yield. As the real yield heads lower, then gold will head higher. So as long as CPI, PCE perception keeps the inflation slightly flat to up, but bond yields are not dropping, it's going to be tough for gold to get out of its own way. All right, just that simple. So again, don't get sort of caught up in the gold silver thing. Eventually, they're going to look good. They both have 1, 2, 3s that look pretty good, and they are buyable. You know, I'm not saying they're not in that buyable range, but again, if you're understanding the markets from a macroeconomic standpoint, you know that copper and platinum and palladium are going to do better. Even things like, I'd like to see our uranium position up today. It's a little flatter than I'd like to see, but at least it's up a little bit from Friday. So I'll focus on those metals and not be too preoccupied with when gold or copper are going to get their mojo back. And again, I've told you when they will, so keep an eye on inflation, keep an eye on the bond market, on that bond yield. All right. So if you guys are in a longer, oh, by the way, I saw a question go by. If you're in corn for, if you're in corn for a further out month, well, one, congrats. What the heck? All right. One, congrats. And two, the reason I'm having to get out isn't because I don't love corn anymore. I love corn with all my heart. The reason I got to get out of corn is because I'm running out of time with first notice date. So if you're in the further out contract, which by the way, the next month contract is the N or July or June contract. If you're in the N contract, awesome. You're not in any rush. You're not in any rush at all. Your June expires the end of June. Your May expires end of April. Meaning this Friday, I'm just flat out of time. So I really want to be out by the 29th. Okay. All right. So next up, and if copper, anything that's coming up on that first notice date, gang, try to focus on being in that rolling mindset, which we talked about in the premium video, about 2 weeks out. But when it comes to the exit, I got to get out. And by the way, exit does not mean entry. So the roll somehow says I just get out of one contract and buy the next. That's not what we do. We just look for another setup. So, keep that in mind. Really 24 to 48 hours out, you really want to be thinking about looking for the exit in a contract that's nearing, that first notice date. Darn it, I just spilled coffee all over me. Give me 1 second, gang. Apparently, I can day trade, walk 2 rooms through all this, but I can't talk and sip coffee at the same time. Newsflash, gang. Don't try that. Okay. Note to self. Shut up while you're drinking your coffee. All right. Or macaroni and cheese. I might be able to pull off macaroni and cheese, Twitchy. I just have to chew with my mouth open, but we're not on video, so. All right. So again, what I'm trying to remind everybody, gang, is don't live only in the 1 minute. I'm pretty much I'm done 1 minute trading, gang. Either I'm going to get stopped out of my Dow or I'll be able to maintain at least. Oh, let me show you what that Dow stop out means. I know some of you might be thinking, Rag, I'm not quite sure of the math. Okay. So clearly you don't have to be a genius to trade, because I just spilled coffee all over myself and I've had a great morning. So see, you don't have to be a genius to trade. All right. What's 25%? I can risk 67 cents, which we were never really near. 15% was probably close. That would be risking of the premium paid 40 cents. So if you were down more than 70 cents, gosh, you really shouldn't have been, if you bought those V-score dips, V-score oversold bounces, but, and I'm still barely break even on these, but it's a whole, and I'm talking about those DIA calls. Everything else is looking okay. And NAS continues to punch up to higher highs. We've had 2 opportunities now to buy in the wave, and ES has hit the value area high. So that 81 entry, look, I'm not excited, gang. I'm not excited for a first target at the value area high. I'm really not, but I can start to scale out. And if we can punch up through 85, and if we make a run for 14,000 on the NQ, we'll start seeing intraday higher highs on the ES, unless the Dow starts to sink, which again is unlikely if the tech market starts to move higher, because the tech market has the unique ability of raising the different indices because of the weight tech has in the markets. Okay. And if you're catching this for the first time, either on the live stream or in the room, gang, number one, yeah, today probably feels like a lot of moving parts. But you know what I'll talk about tomorrow when I see you in the morning? The same 2 pitches, wave entries, V-score. And when you see the repetition of the pitches, you are going to be able to be at the plate, bat up, ready to go, because you'll recognize the pitches. Do you recognize the pitches on day 1? No. But by day 5, 6, this is not going to sound like a foreign language. Or I should say session 5, 6. By session 7 to 10, all of a sudden you're going to see, oh yeah, there it is. Heck, by anywhere from 1 to 3 months in, as I like to say, a lot of you are going to start front running me, because you're going to see exactly what I am looking at. And that is fine by me. A teacher always wants to see your students do well, right? If not better. I've always said, what's my favorite part of the day? Making money. But what's even better than that? When we're making money, right? That's the fun part. That's the fun part. Okay. Oh, you know what? I do want to talk a little bit about this Dow, because again, I'm gonna harp on the things that are, not in the green. Everything else is very green. This is lagging. Well, again, when did we have our first couple of opportunities? This was the first, second. This hit the value area high or the break even, right? This is where we ask ourselves, am I within that 15 to 25% premium loss? If you're going to keep it at 15 for any number of reasons, that's fine. The 15 I mentioned because I want that to be a little bit of a warning track. That's not where I will exit, but it's where I want to notice that at least I'm not as clearly, I've kind of wandered towards the tall grass, right? I'm not in the fairway anymore. I'm going to wander towards the tall grass. And if that is the case, I just want to be psychologically and quite frankly, not to get all woo-woo about this, but I want to be emotionally ready for the fact that I might have to take a loss. That's really it. I think a lot of traders don't psychologically prepare themselves for having to take the loss, and that's why they don't take them. So that's my little warning to myself. Okay? So why I'm trying my patience, but it's not a huge loss. In fact, it's kind of break even-ish at the moment, and then everything else is more than making up for that. 2 boring little 41, 81 entries to 84. Look, I'm not celebrating over a 3-point move, but I'll take it. At 3.5 points, I'll take it. On a day like today, I'm pretty darn happy because my overnight book, futures. So here's another thing to remember. Well-rounded. I talk about being a well-rounded trader. My day trading is okay. My Sector Secrets Mastery book, up. Our premium futures swing trades, up. Do you guys know the difference between a swing trade and a day trade, the way that I teach it? So day trading for me is, those 1 minute time frames. Trading from 9:30. And I don't care what other people describe it as. I just want us to be on the same page when we're together. Everyone should define, I guess nowadays we kind of have to, right? When literally can mean figuratively, we probably need to revisit what exactly the heck we're talking about. You guys know that? People have used the word literally so stinking much that we actually have to mean figuratively, by the way. It's actually defined as both. I know the English major in me wants to punch a hole in somebody, but so I want to make sure we're on the same definition. So day trading, 1 minute time frame, and that's really a 9:30 to 11:30 short term game for me, and that's straight from Ultimate Day Trader. Okay, swing trading. Now this is probably a crazier definition. By the way, all day trading means is that you're going to be out by the end of the session. It doesn't even denote a time frame. That's all that it means. All day trading means is that you will be out by the end of the day. That's all that it means. It actually does not mean it's a time frame. It just typically, to put that kind of trade style to work, you've got to be on a short-term time frame. 1 minute, 2 minute, 3 minute, 5 minute, 15, 10, whatever, right? But all it means is you're going to be out by the end of the day. By the way, the first kind of trading, when Wall Street was a big field with a wall running against it, to keep, you guys remember way back then, right? That was the first kind of trading. Everyone went home flat, going home flat, right? That's what that means. Swing trading. Okay. My definition is a little different than probably you've heard, but that is trading pullbacks in an uptrend on the daily for a longer term time frame. That's it. That's it. It doesn't mean 3 to 5 days. It doesn't mean 5 to 7 days. It doesn't mean whatever the arbitrary number of days are. It simply means the market is trending and it's corrected. Right? And that is the most daily end of day time frames, gang, are the most psychologically significant time frames. People don't gauge their portfolios based on the print at 12:30. They look at the end of the day. The closing price for a session is the most important price for a session. Another thing that you guys will notice is this morning, were we ever looking for shorts? In fact, am I even uttering anything about shorts even now? No. The only shorts that I'm looking at are the ones that I have on. Okay? That's it. So keep that in mind. Never once were we talking about shorts, fading this market, all that kind of stuff. Bullish bias, we used the VWAP, made it really easy, and I'm not looking two ways. Okay? All right. And by the way, if I can get out more or less break even on my remaining YM, I will. Pretty much right now, okay? I am looking to get out more or less break even, which is not far from where we are, okay? Right now, as I talk to you guys, YM's flirting with 34,000, 34,990, 34,000 even. You have a very good opportunity to get out of break even, or just barely below that. Some of you might even be at a slight gain based on where you, I don't know. I'm not going to assume that gain. I'm going to assume break even on DIA. I'm okay with that. If they take off, great, but I'm really not that interested in holding this anymore because I've got a nice winner in the NQ by way of the options. I've got a winner on the ES that's now at break even. And then if those two take off, terrific. It will more than make up for whatever small amount of medicine I'm going to take on that DIA. And just to give you guys, okay, Rag, well, where is the DIA trading? I didn't take the trade, but I sure like to follow along with what you did. 268 to 270. I got a 270 fill for most of my calls. And those were we talked about those three. Let me go back up here. Now, by the way, for those of you that are wondering, how many times we come down and hit the V-score? A lot. A lot. Okay. I'll give you some, depending, you guys might have gone 340 or 339. The 340s are trading at 263. The 339s are trading at 305. Nothing sexy here. Like I said, you can take a little bit of medicine if you want, just get out. If you're comfortable with the 15% risk, sure. If you want to keep it more or less at break even because you're up, that's fine. But you've got two other setups that are outperforming. So don't be too fixated on the things that aren't working right now. Okay. All right. What other questions do we have here? Do my tools work on TradingView? Yes, most of them do. Not all of them, though. Not all of them. Mostly it's TradingView, TradeStation, and Thinkorswim. TradingView, TradeStation, and Thinkorswim. All right. I saw some questions about pivots, gang. I don't use them. So I'm not going to comment on something that I don't use. Right? I shouldn't. No one should comment on things they don't use or have used. But yeah, I'm not saying pivots aren't any good, but they're not anywhere near my focus. I've got things like Fibonacci, Darvis, VWAPs, Voodoo lines. I've got other things that I like. So whatever your chosen analysis is, cool. All right. Let's see here. What else do we have? Yeah, the V-score is not available yet, but I think it will be available soon. Can you use Darvis boxes for trailing stops? You can. That would be a more aggressive style, but yeah, you can. I don't think that's invalid at all because those are minor low derived lows. Sure, there's support. Sure. All right. As far as targets go, again, I use usually the value area high or the clearing high, whichever comes first. Somebody asked if I use the V-score high. No, gang, the V-score might be a second or third target, but the initial target is the value area high or clearing range high, whichever comes first. All right. Do we stream the close? Jennifer, not usually. Most of us are morning traders, but the opens are what we focus on the streams. All right. Let's see. Mike says you got into corn and soybeans with my suggestion. I'm very pleased, Mike. That's great. That's great. Let's see. And again, keep those first notice dates in mind, gang. Is there a micro for copper, platinum, palladium? No, Katie. No. There isn't. All right. So next, how about Sierra charts? I do believe we have some charts for Sierra, Clive, but I don't use Sierra. Not that there's anything wrong with it, but there's only so many platforms, one can use. So I believe they can push a chart book through with many of my tools. We have that arrangement with Infinity. So if you talked with Infinity, they should be able to push the chart book through, but I cannot confirm that for sure. I think some tools are available on Infinity's AT charts, but you should have most of what you need on their chart book that they can push through. All right, let's see what else we have here. Talked about the calendar. Yeah, and if you're not checking out the premium videos, gang, clearly by the time we finish day trading and then I answer some questions, I'm always flat out of time. So, diving into the premium videos, if you're interested in some of these swings. And by the way, again, I don't mind kind of a Mia swing trading day because our swing portfolio, I don't mind a Mia day trading day, sorry, because our swing portfolio is en fuego this morning, right? So how nice is it to wake up, look at longer term. That could be the options. It could be the minis. It could be micros. It could be ETF alternatives or whatever. But it's nice to wake up knowing that I've already made money and there's no pressure for me to sling some day trades, like some sort of adrenaline junkie, and to make what I need to pay myself or I'd like to pay myself. We operate across multiple asset classes. We operate across multiple time frames, all in the hope that we're grabbing trends that can pay us, whether that be a short-term time horizon or long-term. It's really up to, really, quite frankly, the capital that you can allocate to your trading. But there's a number of ways to make these less expensive, like buying a corn options call instead of corn, or buying options on copper instead of the underlying copper contract. I mean, there are ways we can make this affordable, because the same trigger that I give you to buy copper futures will be the same trigger you will use to buy the option of it. And that's something that gives you guys a lot of latitude to choose your, as I say, choose your adventure. Remember those books when we were kids? Choose your own adventure, using risk as your guide to build a position, right? And gang, this seems to bake a lot of noodles. For what reason, I don't know. But think of it this way, gang. Risk has to be your number one prerogative, because trades can be not low quality, but just unaffordable. Affordability is best reached by less size, right? Less size. And the next thing you do would be your entry price. See, most people want to move the stop around. No. We have a wider entry zone, and the closer that entry is to the stop, the lower the risk. So those are two ways to control, that you can control your risk, how much you trade and from where you trade. Everything else is out of your hands, is out of my hands, is out of our hands, right? The other thing is, and this one especially bakes noodles, is I can't tell you guys how many contracts to trade. You realize what a dangerous thing that would be for me to tell you, right? Because I don't know your account size. I don't know how many other contracts you have on. I don't know how much margin you've used, right? And then multiply that across hundreds of people. There's no possible way I can tell you trade one contract here, two contracts here. It's irresponsible. What I can tell you is how to determine what your risk is, and your risk determines your position size. All right? Your risk determines your position size. And it's really interesting to me that for a lot of traders, it's, well, how much money do I have in my account? No, it's how much money can you afford to lose of it. That will determine your position size. That's what I call market money math. We did an entire course on it. How much are you allowed to lose per trade without exceeding 5% of your account size? That's where the conversation starts. And then you can start to say, all right, well, if this is my risk and every one of my positions goes to stop loss, how many contracts am I allowed to trade? We work backwards. And it's the same arithmetic. We're just starting from the other end of it. Okay. All right. Let's see here. Where are the premium videos? Sure. If you're new to Simpler, that may not be something that you've checked out yet. So when you log into your member dashboard, you go to whatever service, and I know many of you have multiple services, but go to whatever service you've got. While looking at the dashboard, you'll see that there is a link for premium videos. And then here are all the premium videos. Every night, me and my mug, my favorite elephant charm right there. Walking you guys through bond, silver, gold trio, what to look for, why it's, again, VWAP anchors, ETF for options and swings, all this stuff, gold, silver, bond, dollar, Russell, metals. We've been talking about this copper narrative for a long time, energy narrative for a long time. You can see that the conversations for the premium videos are pretty simple, because once you tune into a couple of these, it's an ongoing narrative. Because, at any given time, I'm maybe only considering about a dozen futures contracts being liquid enough and even under consideration from a relative performance standpoint. And then of those, say, dozen, we might only be looking at, say, 4 to 6 of these. So it's a very nice, compact little pond that we're swimming in. When we are trading commodities, and the same thing goes for currencies too, gang. You know, stocks are just a vast universe, and scanners are very popular among stock and ETF traders because they have to be. Scanning commodities and futures, ridiculously simple, because maybe in combination you might be looking at a dozen, maybe 16 symbols that you're just scanning, and then of those, maybe 25% of them might actually have a proximity to an entry level. You know, so very nice compact market. That's what I love about futures and currencies, and just a nice compact world. You know, when I'm scanning for sector secrets, oh my gosh, I'm scanning upwards of 250 stocks across 2-3 dozen ETFs. So it's a whole lot of scanning. It's a whole lot of scanning. As far as alternatives to corn and soy, it's CORN and SOYB. And if you guys are keeping up in the live stream, that means you're in the futures. You're in the Simpler Trading YouTube channel. And I put a free video out every single day, come rain or shine. And not even 5 or 6 videos ago, we had an in-depth discussion about the grains in the free video. Okay. All right, let's see. Let's see here. Where is the room drive? Sure. You look at the room. This is for, obviously premium members, gold room members. In the upper right-hand corner, you'll see what looks like a half-open folder. And that's where I put all the different resources. David has a number of them in there. Neil shared some as well. I don't know what else is in there, but yeah, check it out. But all the indicators that I share for TradeStation and Thinkorswim, and then the one we have for TradingView, the script is all there. All right. All right. So we got two setups today that we were looking for right off the bat. V-score fired, then breach, retreat, and then a couple wave entries, and that's about it, gang. And I'm winding down now, and I'm going to hand the mic on over to David. He's going to take you all through the remainder of the morning, but you guys know what we have. Keep a tight leash on the Dow, DIA. Why make that a big loser if you've got some great trades going in the QQQ, SPY, and ES? All right. So let's see where this morning takes us. We're entering the midday doldrums. So this is when I wind down the day trading. It's good to take a longer look at the markets, and that's exactly what David's going to do. Enjoy the rest of your day. Be good to each other, gang. I'll see you in the videos. And those of you that are in the live stream with me, thank you so much for joining us. There'll be another live stream on Friday, and then another live stream next Monday. And I will see you all the following Monday for another session. But check out our different content. If you haven't checked out the free videos, do so, because almost every single trade we talked about in terms of swings, I did share some of that information with you all. So in those free videos, so do check those out. And again, thanks for being here for the live stream. I really appreciate it. Hope you got a lot out of that. The replay will be available on the channel, on the YouTube channel. And yeah. I won't be here Friday, nor will I be here next Monday, though. I'll be here the following Monday. So we take turns with these different sessions. But definitely check everyone's sessions out. I think you'll learn a little something from everybody here. All right, gang. Be good to each other. I'll talk with you soon.